All right, the world of crypto is in a rough spot right now. We talked about it yesterday. Coinbase is down $51 right now. Let's go to Bitcoin really quickly. In the software, Bitcoin is down at $22,000. Where is Bitcoin? Right here. There we go. 22,685. It touched a low of 20,821, which is insane. I mean, it was $800 away from going into the teens, into the 19s of thousands, which is just insane, right? So we've seen a major crash happen. It was 32,000, went to 22,000 over the past couple of days. Everything is going rough on crypto. And as a result of this, we have a new story that is out today. It's out today, this morning. Coinbase lays off 18% of workforce as executives prepare for recession and crypto winter. Now, we saw this happening over the past couple of days because Coinbase was starting to issue out some like pausing freezes, and they were giving some rescinding offers to some people. It was kind of screwed up because some people, like, they needed their visa from Coinbase to sponsor them, and like, yeah, it's just kind of messed up. But they are ready to lay off about 1,100 jobs because of what's going on in crypto. So let's read through this and then we'll talk more about this. The cryptocurrency exchange will cut 18% of full-time jobs, according to an email sent to employees Tuesday morning. Coinbase has roughly 5,000 full-time workers, so about 1,100 people are losing their jobs. Shares of Coinbase were down 5.4%. CEO Brian Armstrong pointed to a possible recession and need to manage Coinbase's burn rate and increase efficiency. He said the company grew too quickly during the bull market, so they were hiring way too many people when the market was going crazy. Coinbase was trading at $200-$300 a share. Obviously, they were growing a little bit too fast for the market. We appear to be entering a recession after a 10-year economic boom, which is correct. For the past 10 years, we have had an economic boom. 2020 was a very small COVID recession, and then it came right back booming higher than ever. A recession could lead to another crypto winter and could last for an extended period. Armstrong sent in the email adding that past crypto winters have resulted in significant decline in trading activity. While it's hard to predict the economy or the markets, we should always plan for the worst so we can operate the business through any environment. And as a result of operating the business through any environment, we've got to cut some employees. Coinbase had initially said it was pausing hiring. 2 weeks later, the crypto giant announced that it was extending the freeze for the foreseeable future. Earlier this year, Coinbase said it planned to add 2,000 jobs across product, engineering, and design. Those 2,000 jobs are now going to turn into 1,100 layoffs. Our employee costs are too high to effectively manage this uncertain market, Armstrong said. While we tried our best to get this right, in this case, it is now clear to me that we overhired. One thing that they could have done, but this is a problem with tech in general, it's not a problem with Coinbase, is just redo employee compensation. I mean, like, tech employees are paid a lot of money. You're talking about a couple hundreds of thousands. If they had just reduced that, maybe they wouldn't have to fire that many people. And I'm assuming the employee doesn't want to lose their job, right? So the problem was, though, the conundrum is in the bull market. If you're only going to give 200,000 and Netflix is giving 340,000, well, like, that person's going to go to Netflix. Like, Coinbase has to match that. And so it's not really their fault. It's just a structural problem with the technology industry in terms of the inflated levels of salaries, which you could argue aren't supposed to be inflated because, tech is very lucrative. But nonetheless, when the economy crashes, it can get pretty rough, especially for those overpaid salaries. The news comes during a deep rout for Coinbase shares. The stock went public via direct listing last April. Coinbase shares are down 79% this year and 85% from all-time highs. Meanwhile, Bitcoin has dropped near 22,000 and lost 5.3% of its or 53% of its value this year. San Francisco-based Coinbase reported a slump in users in its last quarter, a 27% decline in revenue from a year ago. The company gets the majority of its top-line transaction fees, which are closely tied to trading activity. And that's the thing I want to talk about here as well. Coinbase makes money from you buying actual crypto. So if you buy Bitcoin at $30,000 and let's say Coinbase takes 2%, they get that money. But if Bitcoin falls down to $20,000, there's two things that happens. Number one, less people are trading it. More people are just selling and not buying, because if there's that much more selling pressure, then there's less activity on the up end. Like, Coinbase doesn't make money for you selling a stock. They make money for you buying a crypto. So you have to buy for them to be able to make a fee off of it. Well, if everyone's selling and the price is going down, that is reduced trading activity to the upside. So that's the first thing. So there's just less trading activity in general. Number two, even if there is trading activity to the upside, you're buying it at a lower price. If you're buying it at 20 grand and you only take 2% of 20 grand, 2% of 20 grand is lower than 2% of 30 grand. So you're making less money, which means you are having a less average revenue per user. You are having less transactions on the platform in general, and the monetizable features of your users go down because they're just not spending a lot of activity on the product. So if people aren't buying crypto and crypto price is declining, it's a crypto winter in the context of Coinbase. I mean, at that point, they're older employees. They need to be able to optimize for lasting through that crypto winter. Now, crypto has been through this winter before, and I remember because I was in college when this was happening. If we go to the max chart right here, so Bitcoin had this big winter. Let's do, what is this, 2020? right here, 19,000, as you can see, the way it's acting right here. This is let's do 5 years. That's a better way to. Okay, so right here, I was in college. Right here, I remember it was in my macroeconomics class. My professor was saying crypto is worthless. I was right here, right? So it was then $19,891 per Bitcoin. I remember I bought $10 worth of it because that's when I downloaded Coinbase, because I was like, oh, what is this thing? And the Coinbase obviously was just getting crazy amounts of downloads and users and people joining the product. I remember watching an interview with Brian Armstrong back in 2017. I remember I was in the lunchroom at Livingston Hall in Rutgers, and I was just listening to this guy talk about it. I had no idea what crypto was, and slowly, it started to decline, and we got into a really pretty winterish crash, and it lasted until, it bottomed out at 3,200. It lasted until Bitcoin got back up to 13,000, which was okay, 2019, but then it came right back down, back to the 4,000s, and then not until what do we have the launch? Probably around, October, May-ish 2020, we got back to 9,000. Until then, it just kept going, so it took what? 2019, so it took about 3 years for it to start to get back to normal. So if this is happening, 2022, we're not going to see crypto, or at least Bitcoin, from 22,000 back to something like 60,000 for the next 3 years. If we're truly in a bear market, truly in a recession, S&P gets to 3,100. I mean, like, crypto performs just like a growth stock. It's not going to be able to keep up with it, which means if that's the case, if that's what's happening with Bitcoin and crypto, it's an obvious choice at that point for Coinbase to make layoffs, because they just are not going to be able to ultimately afford this. They say Emily Choi says it's a very difficult decision for Coinbase, but given the economic backdrop, she said it felt like the most prudent thing to do. Affected employees received a notification from HR. If so, the memo was sent to a personal email as Coinbase cut off access to the company's systems. Armstrong called it the only practical choice given the number of employees with access to customer information, a way to ensure not even a single person made a rash decision that harmed the business or themselves. They said, we will continue to invest in incredibly innovative areas of crypto that we think are emerging over the long term, but we're probably going to do those in a more measured way in this type of environment. Now, crypto lender BlockFi said Monday was cutting 20% of its employees. Open source tracker layoffs.fyi estimates that more than 5,500 startup and tech jobs have been cut in June alone. Coinbase says that this is a one-time event. They have $6 billion of cash on the balance sheet. The company has lived through multiple bear markets before. We still power through any macro environment, any crypto winter, or anything that's coming. The reality is, though, we have to adjust when we feel that there's a very dynamic economic environment in play. That's what's going on with crypto right now. Ultimately, we're going to see what happens at the end of the day. I mean, it's pretty rough for people who work at Coinbase, pretty rough for people who just got offers. Let me know what you guys think about this, but I think it's kind of inevitable. If crypto and Bitcoin goes down, and there's no reason Bitcoin can't go lower than what it is right now. Just because it's lower doesn't mean it can't go lower, especially if the S&P starts to go lower and lower and lower, then, it's going to correspond with some of the stuff that's been going on with the S&P and the NASDAQ, which is what we've seen crypto do over the past couple of years. Then we might be in for some hard times with crypto. So let me know your thoughts. Let me know your comments. Let me know what you think about Coinbase ultimately having to lay off people. And do you own any Coinbase stock? And are you ready to buy the dip on Coinbase because you think this is an overreaction, and eventually, owning one of the world's biggest crypto exchanges at $49 might be worth it in the next 5 years when crypto goes back to the moon? Let me know your thoughts. Looking forward to reading the comments. I'll see you guys in the next one.